Welcome to another video of FM Biz Hub tutoring accounting 2 students. So I would like to show you how to do chapter 18 Excel work. So please follow along. I'm just trying to get this in the screen so you can see it. And if you recognize this screen, you're in my web class for accounting 2. So once again, welcome to My FM Biz Hub. I will put this on the YouTube channel and I will give you directions on the website on how to load to it. So you click on Learning and Content, you scroll down, and I have a file here that says Excel Vertical and Horizontal Analysis. I'm going to give you a couple of the answers, show you how to fill out the spreadsheet. By now you've already had a few Excel examples that you've done in class, so you should start to feel comfortable using Microsoft Excel. When it's done, you will save it and drop it in this Dropbox right here. So let me open this. And you will have this exact same file. I have an income statement tab review, and I have a balance sheet. So the income statement is a vertical analysis, as you will know from your readings. So the denominator for all our vertical analysis is this net sales right here. So I'm going to highlight that for you. As I go into here, I'm going to say what is sales as a percentage of net sales, and I'm going to go up, so up and down as a vertical analysis does for 2011. And then I will do the same for 2010, but I'm not going to do everything for you. I'm going to do a couple so you get used to it. So sales as a percentage of net sales, sales is 578,000 and net sales is less, so I'm expecting a greater answer as a percentage. So I'm going to put my formula as equals, as you can see in my formula bar, 578, which is B8, divided by 575 gives me just over 100%. I now come over here, I click returns, sales returns, divide this by net sales, and I get 0.52%. I always know if I've done this correct because if I'm using net sales divided by itself, I should get 100%. And I'll do one more for you. My cost of merchandise sold, which would be, the answer would be in D12, and I would divide my B12 dollar amount by the B10 net sales, so equals B12 divided by net sales, and I get a result. So of my total net sales, 66% of that is cost of merchandise, so what I purchased is 66%. On 2010 I will do the same thing, but my denominator in this year, I will highlight this in a slightly different color, is going to be the 553,200. So let me just do one number over here. So cost of merchandise sold divided by the 553. It says in 2010, of my net sales, 67.25% of my net sales was cost of merchandise sold. Now if I go over to 2011, it doesn't matter about the dollar amount going up. Percentages are an equalizer. That's why we use percentages for analytical purposes. My percentages has dropped by almost 1%. So I would be happy as a chief financial officer or as an executive saying my sales has gone up, but as a total percentage of cost of goods merchandise sold, that has in fact gone down. So I'd be very happy with that number. So I want you to go ahead and complete these columns. Save this, drop this in, but underneath here you'll notice in this section down here, comment on your findings. I'd like you to write something in here about the data. Is it trending the same? Is there any big differences? I just gave you one explanation, so maybe you could add that and then write something of your own. This is going to be very similar to the test question you're going to get in just over a week's time. Alright, so the next one, as you've done your readings, hopefully by now you've looked at some ratios. So if you look on the side here, I have a current ratio analysis. So I'm just going to ask you to do something with that in a minute. And then in the meantime, we're going to take a look at make these numbers slightly larger, what we call a year-on-year analysis. And in your book, you would have noticed it said it's a horizontal or a trend analysis. So I'm going to find the variance from one year to the next and find the percentage change from one year to the next. So I'll do a couple of these. So equals my 2011, my most recent year, 17,200, minus 2010 will give me a 9,000 positive increase in my cash in bank. So if I highlight this, you can see what I'm working on. Now, what's the percentage change? So from 2010 to 2011, what I have to do here is it equals my change divided by my base year. So in this case, it's D9 divided by C9. And I press enter. And from one year to the next, there's 131% change. And then I could go through here and do this for all these numbers going down. And I would have something to say, like, you know what accounts payable is. Accounts payable has gone up. Is that good or bad? Or does it really, is it material because sales and expenses change on the income statement? I would look here and say, well, typically cash going up is a good thing. Accounts receivable has gone up. That can be good, but I think you could also give me a reason why you think maybe that could be bad, and I'll let you explain that. So take a look at these numbers and explain. Also over here, if I try and expand this on your screen just a little bit further, I come over and we have a current ratio. So what I'd like you to do here is put in a current asset number, a current liability number, and get a ratio. So let's say it was 1.5. I would do this, I apologize, this should be 2010. So change this number to 2010. And we go 2010 to 2011, and I put another number in here, which your current assets, if you see here, will probably be different in both years, divided by my current liabilities, and I will have a number. And so the industry average is 1.5. You may get 1.5 for both these. You might get something different, like 2 or 3. I want you to look in your text and comment briefly on your findings. I don't want a big essay on this, but just something that describes that you understand what the current ratio is. It's a liquidity ratio, as you would have read. And what does that mean? And when looking at from year to year and the industry, how do you think this company, and I made up some numbers for the FMCC bookstore, take a look. I hope this helps you with your assignment. And if you have any further questions, feel free to send me an email. Thanks.